Welcome back. All eyes are on central banks in North America this morning, with the Bank of Canada expected to deliver another 25 basis point rate cut. That announcement, of course, due at 9:45 a.m. Eastern Time. Stick with us. We'll have that news for you as soon as it is announced. Meanwhile, in Washington, the U.S. Federal Reserve Board is expected to stand pat on rates at its afternoon meeting. That announcement is due at 2 p.m. Eastern Time. Let's bring in our first guest of this hour, Lesley Marks, is Chief Investment Officer at Mackenzie Investments, and she joins us in the studio right now. Good morning, and thanks for being here.
Good morning, Paul.
Okay, so how difficult is the job of the Bank of Canada to forecast what's coming in the Canadian economy right now? We know, of course, what we're referring to, the tariff situation. It almost certainly will have to make some fairly substantial remarks in that regard.
Absolutely, and I think if we were just talking about the Canadian economy, inflation, unemployment, the Bank of Canada's decision would be very easy. I still think it's going to be a fairly straightforward decision, 25 basis point cut. I think the issue that we're going to focus on as investors is going to be the monetary policy report and how they're going to manage that update. The forecast period tends to be 2025, 2026. How do you forecast when you have, you're 4 days away from a potential 25% tariff on the Canadian economy, basically? So a very difficult job for the Bank of Canada to write that report.
The bank speaks in terms of risks, both negative risks and so-called positive risks. In other words, those are influences that could push its forecast around. How much do you think it will say on U.S. tariffs?
So I think that what you will see is a commentary on the state of things today and where they think that the economy in Canada will go without tariffs. And then you will see another track which talks about the impact of tariffs on the Canadian economy, because I think you've got so many moving parts here, and it's going to really cause the need to be nimble when it comes to policy. In addition, we've just seen this week talk from the federal government about a support package for the Canadian economy. The Bank of Canada is going to have to factor that into its decision making. The fiscal and the monetary have to work together. What
are your thoughts on that rescue package that is being talked about now in the press, somewhat similar to the pandemic rescue packages? How much economic impact could they have?
Well, I think that it could be positive for the Canadian economy, but my view, just digesting this information, is I think it's a bit premature. I think that the Canadian economy right now doesn't need a big support package, but that could change. We really don't know what the calculus is going to look like. Is it going to be 25% right away and then rolled back? I mean, when you think about what President Trump is asking for around border control and control of fentanyl coming into the United States, I would think that addressing those issues has got to be a lot less expensive than the numbers that are being thrown around for the fiscal support package. So what I would really like to see is that we get that piece right so that we don't have to come with a big support package, which really just doesn't contribute. It's a short-term Band-Aid, but it doesn't really help in the long term. Canadians compete on the global scale when you're just giving out government handouts.
What about the U.S. Fed? There's an equal sense of confidence in the market that the Fed will stand pat, an equal sense to the high degree of confidence that the Bank of Canada will cut by 25 basis points. But the Fed also has the job of forecasting risks to the U.S. economy. And it's also got to be thinking about tariffs imposed by the U.S. administration and the effect that those tariffs might have on the U.S. economy. What might you expect to hear from the Fed?
That's right. And I think a lot of the focus thus far has been on the impact on potential inflation and how the Fed is going to manage that. And I think that's why we've already seen the rollback in expectations for Fed cuts from what we saw, at the end of 2024, from 4 rate cuts this year to 2 rate cuts. But I think where you've seen it, and you touched on it, the discussion pivot is actually the economic impact, which is the shorter term impact for the U.S. economy. And maybe that's why we're starting to see bonds start to rally, interest rates coming down. And so if that's the case, then the Federal Reserve can actually, if they have to respond to a weaker economy like they had to in 2018, then you could see the scenario where the Fed actually needs to get more aggressive in cutting rates. So what we don't know right now is what the roadmap is. for tariffs, how long tariffs end up, even if we have big, bold announcements about 25% tariffs on Canada and Mexico, how long does that stay in place? What is the trajectory? So both central banks have a very difficult job trying to get ahead of the future here.
Let's talk about the stock market. How much of a reset to the technology story did DeepSeek introduce into the markets earlier this week?
I think it was a little bit of a reset. I mean, I think what it's introduced to investors is, 2024 was really a year of momentum. Momentum was the most dominant factor for investing. And I think what investors are realizing today is that they can't count on that factor going forward into the future or indefinitely. Momentum does shift. You get these news events that many have not anticipated. And I think as an investor that gets very comfortable around investing in a low volatility world, it's a good reminder that investing in stocks can be risky, and particularly high multiple stocks are going to get hit the hardest when you see questions around their potential future growth, which it's been sort of a one-way trade in AI. And I think investors need to realize, again, the importance of diversification in their portfolios.
Are there opportunities in the Canadian stock market right now, given the economic uncertainty we face?
Well, I think that the Canadian stock market, if you go sector by sector, stock by stock, yes, there are some opportunities, but there are also companies that are going to get hit fairly hard. So I think what you want to look for are the companies that are able to benefit from the factors at play, like the weak Canadian dollar. You don't want to be in companies that have a significant export exposure to the United States right now. Even though economically it's good for them with the weak Canadian dollar, what you're going to start to see is companies try to find more domestic sourcing, where in the past they've been able to pull from Canada. And I think that's a very short-term factor. I think, you always have to remember in the United States, the election cycle is not really 4 years. It's a 2-year cycle. So I think there's a lot that's happening right now to get ahead of that next midterm election, and things should start to calm down with the fullness of time.
Lesley, we covered a lot of ground. Thanks a lot for stepping in.
Thank you.
Lesley Marks is Chief Investment Officer